Welcome to today's Twitter Spaces, the F&OP Charcha. Every Friday 6 p.m. we invite one of the best traders and we discuss with them. Today's topic is option buying using price action and indicator. I'm very excited to learn this topic from Gomati Shankar. The speaker for the day is Mr. Gomati Shankar. He's a full-time price action trader who is predominantly use CPR indicator. It means central pivot range. He's also a YouTuber and he's a founder and CEO of Scalpers Trading Academy. He's from Chennai, Tamil Nadu. He may today we will mostly discuss in English, not in Hindi, because Mr. Gomat Shankar is more comfortable with English. Okay, welcome Gomat Shankar for today's FIDOP Chacha.
Thank you, Peter. Thank you for having me.
Yeah. Mr. Manas also with us. He is a product manager at Paytm Money. Welcome, Manas, for today's FIDOP Chacha.
Yeah, I fit it.
Yeah. Let's start with the discussion today. Uh, Shankar, how you started your journey as a trader, as a full-time trader?
Peter, I started my trading during my college days in the year 2014. And at that time, few of my college friends were doing trading side and they introduced me to stock market trading. Actually, during my college days, we were trying for some part-time jobs and we tried data entry jobs. We went for a lot of events for managing and we tried to earn some part-time money during my college days. And at that time one of my friend introduced me to this price action trading, stock market, everything. I was not aware about trading at those days because it requires some huge capital. So what I did, in 2014-15, I was not taking trading as a serious thing, and I used to trade with less quantities. Like I used to trade in penny stocks with 1,000-2,000 rupee capital, and I used to lose money. And like mobile recharge and top up, no, I used to lose money. Again, I top up my account. Again, I lose money, and again I top up my account. And this is how I was trading in my early days till 2017. So nearly for 2-3 years, I was not aware of about this stock market. I'm not aware about technical analysis. I don't know anything about trading, price action indicators, anything. So 2017, what I decided after my college days, I decided to learn this trading, how it works, and I started learning technical analysis. And I started to focus more on indicators in my early days. Even I have tried Ikinashi charts, even I have tried Renko charts, and almost I know more than 20 indicators how to use them. And after learning a lot about technical analysis and indicators, what happens, you mix up everything, and finally you get confused and you won't get a proper solution, or you won't get a proper decision to make.
Right.
And after using indicators, still I was not profitable. And what happened, during 2017 and 18, I was good at technical analysis, I was good at using indicators, but I'm not profitable. And whenever I use indicators, I always have a doubtful mind that whether this indicator is working or not. If I am trusting the indicator and if I am trading, then I would have been profitable maybe. But whenever I use indicators, I have a doubtful mind that whether this indicator works, because everybody is working, then everybody is using that, but everybody should be making money. I was using super trend and Bollinger Bands in my early days more often. So if super trend gives a signal, then everybody would be taking position. So I had a doubtful mind whenever I use these kind of indicators. And then in 2018, later 2018, what happened, I was introduced to this price action trading. My one of my friend asked me to read this book about a CPR indicator. And after reading that book, I was very much fascinated that how a price action trading can be so simple using CPR indicator. And I started to focus more on CPR indicator. And from 18 19, no, I was able to make money from the market, and I gained a lot of confidence and trust over price action trading. And after 2019 I was be consistently profitable every month. And from 2020 I decided to quit my job. Basically I was working for Zerodha and Carvi stockbroking earlier, and I decided to quit my job, and I started to take up trading as my full-time career in 2020. And from 20 onwards I'm an active full-time trader using price action trading, and I am a YouTuber as well, uh, teaching through my YouTube videos as well. So this is my trading journey.
Yes, it's wonderful. Awesome journey, Gomati Shankar. So I have one follow-up question before Manth go for other questions. So you mentioned as like every indicator shows profit in when we use those indicators in the charts, right?
Correct, correct,
And every indicator, it can be a moving average or stochastic or anything you use in the back testing, it is profitable. But
correct.
in the live trading, when we go for a live trading, it's not profitable most of the time.
Yes.
Why this happens? What is the reason for this?
See, whenever we are using the indicator, first we have to backtest manually as well, because when we are learning an indicator and when we apply it practically, we forget to understand the overall trend as well. See, the most of the retail traders, what they are doing is, even in my early days, when I'm using super trend, I directly apply it in 5 minutes chart without knowing what is the actual trend in higher time frames. And same applies to any indicator without knowing the actual trend in higher time frames. If we are directly using the indicator in smaller time frames, definitely it will lead to a wrong decision. So what we have to do is we have to first check the trend in higher time frames, and then we have to apply that indicator, and we have to take at least 100 trades. And before taking those 100 trades, we have to backtest manually as much as possible. I recommend my students to backtest at least for 1 year manually in trading view, and then you come to a conclusion how it is working, when the indicator is working well, at what market condition the indicator is working best, and at what market condition the indicator is not working well. We have to segregate it, and we have to take 100 trades, and then we have to come to a proper conclusion what should be done and what should not be done. In this market condition what should be done, and in that market condition what should be done. We have to segregate through our manual backtesting, and by taking 100 live trades, only then we can come to a proper solution. And that's what I did in my, when I'm using CPR indicator, I did the same right from the starting. I was amazing, I was fascinated by the results. Even I was using RSI, super trend, Bollinger Bands, ADX, MACD. But when I am trading with those indicators, I was having some doubtful mind, and I was not happy with those indicators, though I know how to use. But when I
Right.
started to use the CPR, no, right from the day I started backtesting, and right from the day when I took my first trade using the CPR indicator, it was very so simple. And uh, and it is having a better accuracy. What I will tell is CPR is having a better accuracy comparing to other traditional indicators like RSI, super trend, everything.
Right. Shankar, why you pressing that like saying we have to do the manual backtesting? What can't we do the automated backtesting for a longer period of time?
Definitely we can do, definitely we can do automated backtesting as well. But I basically I'm from a non coding background. I don't know
Okay.
anything about computer. So for most of the people are like that. Most of the retail traders, they won't be good at programming. And even if they are having a knowledge about programming, everything, coding, Python, everything, then they can directly go for automation. And but what I will tell is, but in my in our initial days, even if a person who knows coding, what I will tell is, don't directly jump into automatic trading. Do some manual trading, manual backtesting for at least 6 months, so that you try to understand what is happening in market practically. So you get a practical experience in the market by doing manual analysis, and how you are handling the live market experience, the live market experience you get when you are doing some manual trading and manual backtesting. After gaining some sufficient experience, after gaining some maturity in trading, then you can go for automation or back through automatic creating algos or doing automatic backtesting, etc., etc. So basically, I'm from non-coding background, so I usually do manual backtesting. Whether it takes 1 week or whether it takes 2 weeks, I doesn't bother. I just sit day and night and I do manual backtesting, and then only I come to a decision of whether I should take this strategy or not.
Okay. So wonderfully said the last, specifically the last point that like to get the dynamics of the market, one should first manually test and try and then go to automated trading. So I had, before jumping into the question related to the price action and the indicator, so wanted to know like you are full-time option buyer or like you try to sell also, and like how is it your intraday position or you take overnight also, and the instruments in which you generally trade.
Okay, most of my trades are option buying. Let's say 80 to 90% of my trades are option buying trades only, and this remaining 10 to 20% I do option selling. That too, I do directional option selling. Though I'm doing directional option selling for 10 to 20% of the time, I do risk defined hedged strategies only. I do naked option selling very rarely. And regarding the instrument, predominantly I trade only in Bank Nifty options. Bank Nifty has been, I've been trading Bank Nifty from 2019. So whatever happens in Bank Nifty, it gets easily identified by me because I'm trading one instrument for these many years. And I take trades in stock options also. Whenever I take a trade in stock options, I try to carry forward it if the setup deserves. Otherwise, I never carry forward my position. My whenever I'm taking a trade in Bank Nifty, those trades in Bank Nifty will be purely intraday. I never carry forward my Bank Nifty positions, whether it is buying or selling. But when it comes to stocks, I trade in stock options, and I do carry forward in stock options at the starting of the month. Now, at the end of the month, what I do only day trades in stocks. At the start of the month, I do carry forward in stock options as well.
Okay, wonderful. And like in the intraday, like what is the time frame generally you follow in the intraday candle
As a
interval?
full time price action trader, to take my intraday trades, I prefer 5 minutes chart, and for taking my entries and exits, I prefer 5 minutes chart. But for analyzing the trend, to study any particular instrument, what is the trend of a particular instrument, I use weekly and daily charts to analyze the overall trend. To take a decision, trade decision for intraday, I use hourly chart and 5 minutes chart. So this is how I use the time frames for taking position.
Yes, great. Shankar, today's topic is option buying using price action and indicator.
Yes.
Can you please explain how you use price action to buying a option and what all the indicators you're using? Can you please give some setups or what you're using and how you trade? Can you please explain to us?
Sure. When it comes to price action, I focus primarily on Dow theory. So let's say I'm going to take a trade in Bank Nifty. What I do is I start from the higher time frame. I go to weekly chart and I check whether the trend is bullish or bearish purely based on Dow theory. Dow theory is basically higher high formations and higher low formations, and vice versa for bearish trend, lower high formation and lower low formation. So using plain chart, using Dow theory, I determine the trend first in weekly chart, and then I determine the trend using Dow theory in daily chart, and then I determine the trend using Dow theory in hourly chart. Now, when I am analyzing the plain chart with Dow theory in these three time frames, I get to know the complete details about the trend in that particular instrument. Let's say for Bank Nifty. So I get to know the trend completely in Bank Nifty using price action, this Dow theory. Now what I do, I use CPR indicator to cross check the trend as well as to time my entries. Now, what I do, in daily chart, I
Can you
apply
explain like
weekly.
what is exactly the CPR indicator for audience for those who are uninitiated?
CPR indicator is basically a pivot point. CPR indicator is nothing new to wonder. It is basically a pivot point which is having three pivot lines. In general, CPR in general pivot points, we have a central pivot line, and at the top we have resistances, and at the bottom we have support levels. Basically, we have one pivot line at the center. Now, when it is a CPR indicator, we have three pivot lines at the center, and resistance levels are common at the top, and support levels are common at the bottom. Instead of having a single pivot line, we will be having three pivot lines. That is called as central pivot range, and we call it a CPR indicator. So, using this CPR range, using this CPR indicator, we can easily determine whether the trend is going to be bullish or bearish for that particular day. And when we are using a weekly CPR, we can easily determine whether the entire week is going to be trending or not. Using monthly CPR, we can easily determine whether the entire month is going to be trending or not. So basically, CPR gives us a easy confirmation about studying the trend. Now, after analyzing the trend in higher time frames using Dow theory, I use CPR indicator to check whether the trend is actually bullish or not, whether the prices are above CPR levels. Generally, in pivot points, whenever we are using pivot points in general, if the prices are above pivot, it is termed to be bullish. If the prices are below pivot, it is termed to be bearish. Same condition applies to CPR indicator. If the prices are above CPR, it is going to be bullish. Additionally, if the CPR range is narrow, if the CPR three pivot lines in CPR indicator is narrow, then it is going to be trending. If the three CPR lines are wider to each other, then it is going to be a sideways range bound market. So using this CPR indicator in daily chart, in hourly chart, and in 5 minutes chart, it is very easy to take a decision whether I'm going to take a long or short, whether even if I'm going to take a position on the long side, where I should enter and where I should exit. These levels are easily identifiable when I use CPR indicator. So basically, option buying using price action trading and indicator is, in price action I use Dow theory to determine the trend, and in indicator portion I'm using CPR indicator to take my decision and to take my entries and exits. So this is how basically I trade.
Yeah. Shankar, you observe that Dow theory means you following the Dow theory, and you come to know that this is a uptrend, and
Yes.
price also above the pure range,
Yes.
right? Pure point. So now, how do you select the strike? Which strike need to be selected, and at what price it need to be bought, and what can be the stop loss and target?
Okay. So basically, I am an option buyer. So option buyers always we should prefer taking in the money strikes. Now, basically, I am trading in Bank Nifty. So generally, what I do uh, during Friday, Monday, and Tuesday, I select three strike prices deep in the money. And when it comes to Wednesday and Thursday, I go five strike prices deep in the money. So option buyers should always go deep in the money strikes so that we can escape from premium decay to a certain extent. Comparing to at the money and out of the money strike prices, deep in the money will have some lesser premium decay. So that will be a good comfort zone for option buyers. And regarding this target and stop losses, my targets and stop losses are purely based on CPR indicator. Now let's say uh, Bank Nifty is going above R1, resistance 1. What I used to do, I take a trade when R1 is broken. My stop loss will be below R1 and my target will be R2. So basically, I will be having a 1 is to 2 risk reward ratio. Now, let's say if the prices are taking supports at CPR range, the prices are rejecting the CPR ranges, and the prices are taking a comfortable support at CPR level. Then I buy at CPR level itself and I place my stop loss below CPR. And now my target becomes R1. If R1 is broken, then I take an entry at R1 breakout. My stop loss is below R1 and my target becomes R2. So this is same for bearish trade as well. If prices are breaking S1 level, I will be going for a short and my target will be S2. If the prices are taking resistance at CPR and if the prices are rejecting CPR, then I will take a short at CPR level with stop loss above CPR. So This is how I fix my targets and stop losses.
Okay. So, as you were talking, like you generally check the underlying, right?
Yes.
Before taking a decision. So, like,
Yeah,
do you
right.
check the underlying futures also, like Bank Nifty futures and or
Uh,
any stock futures?
Whenever I am trading, I am taking a trade in Bank Nifty. I never look at futures chart. I directly look at the index chart, index spots chart, and then I take my trade directly in options chart. So basically what few traders do, they check futures chart, they apply VWAP, they apply volume to study more about the trend, and then they take a decision in options chart. But basically what I do, I prefer index chart, and I take a trade in options. For placing stop losses and targets in options, I do refer options chart as well, and I
Okay.
place my stop losses according to the options candles.
Similar time frame, right?
Yeah, same time frame remains the same.
Shankar, this is very difficult, right? You are observing underlying charts and
Yes.
trading. You have taken in the money call option buy for the bullish trend and defining a stop loss in the option that is depend on the underlying, right?
Yes, actually, my stop loss depends
How
on the underlying, but
how you calculate the means it's a dynamic stop loss, or you calculate when you taking a trade, you calculate the stop loss, maybe approximate stop loss, and you then you place in the market.
no, basically, I determine the stop loss with the help of options candles as well. Now, let's say I'm there is a resistance breakout in spot chart. Now, as soon as there is a breakout in spot chart at R1 levels, I go for a buy in Bank Nifty options. Now, what I will do, I will determine my stop loss using the index chart. Now, let's say R1 is broken at 10 o'clock candle, and my stop loss is below 10 o'clock candle as per spot chart. I'm going to place my stop loss below R1, and I'm looking at the candle size, and if I'm keeping a stop loss below that breakout candle looks convenient for me as per index chart, then I go for a stop loss using the options chart, and I place my stop loss below that particular candle in options. So basically I take a trade whenever there is a breakout candle in options, and I determine my stop loss using the options candle.
Okay, yeah, great. So, per trade, the usually whenever we do trading, there may be a risk management, right? How you
Yes.
do the risk management? Some people say like you don't lose 1% of capital per trade, and some people say half percent. What is your
Yes.
risk management and how you manage? And how you know that? See, if you know that this is my stop loss, maybe
Okay.
resistance level or support level or something
Okay.
breakout level, so that can may breach your 1% of level also. So in these scenarios, the risk management scenario, how you manage this?
Yes. See, basically, as an option buyer, I understand that the market is trending only 30% of the time. Actually, there is a data that option is range bound. The market is range bound 70% of the time, and the market trends only 30% of the time. There is a data which is proven in recent time. Now I am an option buyer, I am not an option seller. So I am aware that the market is going to be trending only 30% of the time. So in a month, maybe the market will be trending only for 5 to 10 sessions or 5 to 8 sessions out of 20 sessions. So what I do, I choose my trades very very carefully. That's why what I do, I check the trend in higher time frame. If the trend is going to be bullish, I am going to focus only on long trade, and that too only when the market is coming out of the range, out of previous day high or out of previous day low. If it is a bearish trend, and then what I do regarding the risk management part, I never risk more than 2% in a single day. And for a month, for an entire month, I risk my drawdown will be a maximum of 10 to 14% only. If my drawdown is reached, if I have lost 14 percentage of my capital in a single month, what I do, I stop trading for the entire month. And in most of the days what I do, I try to avoid trading whenever the market is range bound. Now let's say the market is trading around the central pivot range, I just avoid, I never take a trade. And if there is a wide CPR, let's say the market is, let's say the central pivot range is having a wider ranges, what I do, I just avoid taking position. So as an option buyer, what I do, I choose my trades very, very carefully. I am not a type of person taking 10, 20 trades in a single day, or I'm not a type of person who is trading every day. I should trade every day. I'm a full-time trader. I should trade every day to make my bread and butter. No, I never do that. Only if the setup is perfect, only if my entry is there, only if my criteria is satisfied, I take a trade. Otherwise, I stay away from the market. And as I said earlier, I never risk more than 2% of my capital. So let's say I have lost 1% of my capital in a single day. What I do, the next trade I choose very, very, very carefully. If the trade is not convenient, then I never take the second trade. So in that case, what I do, on that particular day I have lost only 1%. So whenever I lose the first 1%, the second trade will be very, very crucial. It will be like a do or die situation for me. I consider myself in a sitting in the edge of the seat. And what I do, I take the trade very carefully. And and I have many days after losing 1% of my capital, I have recovered in the second trade or third trade, because I choose very carefully. Even today, I traded in LTTS, Larsen and Toubro Technological Services. So that trade, I was waiting patiently for nearly a week. I was adding LTTS to my watch list. I added last Sunday, and it gave me a beautiful trade today. So what I do, I just wait patiently for my trade entry, and then only I jump into the trade. So as an for every option buyer should understand that patience is very, very important. If we are not having patience, then we are not going to survive as an option buyer. Option buyers can survive in the market if we understand the reality that the market is going to trend only 30% of the time. We can make money only when the market is trending, and we should trade cautiously only on those particular trades. So this is how I do my risk management part. And my drawdown will not be more than 14 percentage. And even if I'm losing 10 percentage for a particular month, I just quit trading for the entire month, and I come back after the month is over, and I start the next month in a fresh mood. So this is how I basically do my risk management.
Wow, super, super. I really liked it. So, see, as an option trader, option buyer, or option seller, the patience is very important for both the cases. It's
Yeah,
not only the
exactly.
option buyer or seller. Seller also have that unlimited risk kind of things, and he also wait for the theta decay happen, right?
Exactly.
So it's very difficult. And option buyer also, you should not jump into every trade. No
Yes.
trade also a good trade. So
Yes.
if you're not taking that trade, that's fine. It's not like every day you have to take. And the last point you have mentioned that don't go for the revenge trading. Like if you lost maybe 5% or 10% as a drawdown,
Yes.
then don't go and just jump to recover the money in that month. Maybe that month is bad month for you. Just
Exactly.
take a break and go for next month. Come with a fresh mind.
Exactly.
Wow, this is actually really super. I like that. Uh, okay, I have one more. Maybe yeah, Manas, you have one question. I think. Yeah,
Yeah,
go
so
ahead.
one question from the audience to Mr. Gumti. So, like he's asking about CPR indicator only. So in CPR, usually the he's asking that usually the top central pivot point or TC is above the central pivot and the bottom pivot point BC is below the central pivot. But sometimes the opposite happens, wherein the
Yes.
TC is below the CP and BC is above the CP. So why does this happen? This is
Yes,
the question.
actually, basically, it's a formula. At times, what happens, TC comes below CP, below the pivot, and BC comes above the pivot. In that case, we can consider BC as TC, and we can consider TC as BC. That's it. Anyways, for that particular day, the top line is considered as TC, whether it is TC or BC. The top line is considered as TC, and the bottom line is considered as BC. So, because of the formula, sometimes the lines interchange, but that is not at all an issue. You can consider TC and BC as it is.
Okay.
Audience, if you have
And
any questions, please post those questions here. We will ask those questions to the speaker. Yeah, Manas, go ahead with the second question.
So yeah, initially you mentioned about like manual back testing, right? So one
Yes.
of the audience asked like, can you throw some light on how to manually back test?
Okay. So generally in trading view you can do backtesting for, if you are having in case you are having premium version of trading view, you can backtest manually for 1 year. So what I do actually, in my early days, this trading view bar replay was very useful for me to backtest. What I used to do, I go for bar by bar replay, and I used to tell myself where I could have entered in this particular trade. Even at times now, even now in in some instruments, let's say Sun TV, recently Sun TV gave a super bullish move on the upside. So I missed Sun TV, and I was going back and checking why I missed Sun TV and why I did not add it to my watch list. And in that case, what I do, I go for backtesting. What happened on that particular day, how the breakout happened in daily chart, and I come to hourly chart and I check where is the breakout exactly in hourly chart. And in 5 minutes chart, I try to understand where the breakout happened as per 5 minutes chart, and how was the CPR position in this particular case. So this is how, even now I'm doing backtesting manually in stocks, in case if I'm missing any particular instrument. So this bar replay feature in trading view helps you to backtest for past 1 year if you are having premium subscription. So that will help you to do some backtesting, how where you can keep your stop loss, where you can keep your targets. And this is how you can do manual backtesting on your initial days. After doing a backtesting for at least 6 months, in case you are not having premium version of trading view, then you can do manual backtesting for at least 6 months. And you can start with one lot, maybe with one lot in, if you are trading in Nifty and Bank Nifty, or if you are trading in stocks, then you can trade with lesser quantities as possible, and you can take some 100 trades and check whether your view is going right as per the strategy. So this is how you have to do manual backtesting.
Great. Uh, Shankar, I have some question for you.
Okay.
How much capital one should have before starting is like a option buying trade, and how much should he have to risk per trade as a his capital?
Okay, so this is a very common question which is asked by most of the beginners and retail traders. How much capital should I start with trading? So basically, what I will tell is everybody should start with the standard capital of at least 25,000 or 50,000. Because many retail traders, what they are thinking, I'm having 1,000 rupee now in my hand, so let me transfer it to my trading account, let me buy 10 shares or 20 shares and let me do a gambling. They are thinking in that way, they are having a mindset of that particular thing. So that should be avoided. You should not start trading with 5,000, you should not start trading with 10,000. You should have a standard capital size of 25,000 or 50,000. And with that 25,000 and 50,000, you cannot risk 1% or 2%, because that will be easily hit. Because 1% of 25,000 is just 250 rupees. So if you are taking a trade in Bank Nifty options, then it will be easily hit. So when you are having a less capital of 25,000 or 50,000, you cannot maintain a standard risk management of 1% or 2%. In that case, you can, what you can do is, you can risk 3 to 4% of your capital initially, and you should promise yourself that you will take only a high probable trade. You will not take trade every day. You will trade only when the market is trending, and you will check whether the market is sustaining above resistance levels or previous day high levels. When you are having a capital of 25,000, you should not trade when the market is inside previous day high and low. And when the market is coming out of previous day high or previous day low, you should check whether the market is able to sustain. Whether the market is, let's say the market is breaking previous day high, check whether the market is able to sustain above previous day high, and then you take a trade. Only then you can able to scale up your small capital, as well as you can build your confidence as well. See, basically, a trader, a beginner who is having less capital, first he needs to build his confidence. Money is secondary, making profits is secondary. First you should build your confidence To build that confidence, you should focus on high probable trade, because in high probable trade you will be winning. So when you are winning in a high probable trade, it will automatically builds your confidence, and then you can increase your capital. So when you are having a small capital, it is very difficult to practice 1% 2% risk on your capital. So you can aim for 3 to 4% risk per capital, or you can aim like, I will lose only 1,000 on a single day, and if I am losing more than 5,000 in a single month, then I'm going to stop trading. Like this, you have to set a limit. I will not, let's say I'm starting with 25,000 this particular month. I should promise myself that I will not lose more than 5,000 in this month. If I have lost 5,000, then I will not trade throughout the month. And I should focus, and I should promise myself that I will take only a high probable trade. I'm not going to trade every day, only if there is a high probable trade. I still remember in my early days in 2018 and 19, I used to create alerts in TradingView. Only if the market is coming out of previous day high, or only if the market is coming out of previous day low, I take a trade actually. So what I do, I create alert every day when the at the day high and day low levels. The next day when the market breaks previous day high or low, I get an alert in my email ID, and quickly I log in and I go for a trade. So this is how I was doing in my early days. So same thing you can do. Create an alert at previous day high and low. When there is a breakout, you take a trade. So this is what I will advise for a beginner. Start with a standard capital size of 25,000 or 50,000, and you cannot maintain a proper risk management of 1% or 2%. So uh, you can try to keep 3 to 4% as a risk on that particular day, and you can promise yourself that I will not lose more than 10 15 percentage of my capital in a month.
Yes, great. So here, I think every trader should understand about the drawdown and the backtesting, what Gomati Shankar has mentioned. So you have to do the backtesting, understand about the drawdown. What can be my drawdown as a historically? And at least I have at least two times or four times more than your drawdown money as a idle money. Don't put that as trading, I think, and trade with some other money, because whenever that drawdown happens and you don't have for a trading, then there will be very difficult for you to survive. So the trading is everything about the discipline. I think Gomati Shankar also agree with this. You have to keep on trading, and also it's about the discipline. It's not yes, you have to wait for the high probability trade, and that is also every high probability trade you have to take. It's not like every high probability trade make give a profit. Am I right, sir?
Yes, yes, you are right.
Yeah. So here, as a follow-up question here, so if I want to become a full-time trader, option trader, as a professional trader, then how much capital should I have? I should have, and how much return per month? Maybe capital is a different thing, but how much return per month I should expect from trading?
Okay. So this is also a most common question which is asked by most of the beginners. When can I become a full-time trader? And if I become a full-time trader, what should be my capital size to make my bread and butter for the entire month? So what I will tell is, to become a full-time trader, first there are certain conditions that you should fulfill. To become a full-time trader, first you should be doing part-time trading, and you should be successful for at least 1 year. Many people, what they are doing, they are trading, they are successful for that particular month, they are winning 60-day challenge in Zerodha, and immediately they are planning for full time trading. No, that is the worst decision you are going to take. So what I will suggest is, you should be profitable as a part time trader. Whatever job you are doing, that is secondary, you can do that. But as a part time trader, you should be successful for at least 1 year, and then you have to plan for full time trading. Now when you are coming for full time trading, what you should do is, you should have your 1 year salary in your bank account to run your family. You should forget that you are not going to earn for the next 12 months. Let's say you are going to start your full time career on January. From Jan to December, whatever you get as an annual salary, let's say you are getting 5 lakh per annum, you should have that 5 lakh in your account, and that should not be touched, because that is going to run your family that for that particular year. and you should forget about making money on that particular year. From January till December, you should forget that you are going to earn money from the market, or you should forget you are going to make profits or not. Because if you are having those kind of thoughts, you will be under pressure. So you should have a 1 year part-time trading experience, and you should be profitable in that 1 year, and you should have 1 year salary in your bank account to run your family, so that your family will not be dependent on you. Otherwise, what happens every first week of the month, your wife will be asking money for gas cylinder, your wife will be asking money for buying groceries, vegetables, everything, etc., etc., to run your family. So you should be free from family financial pressure. So keep 5 lakh rupee. If your let's say your capital, your yearly salary is 5 lakh, keep that and keep it in your bank account, and don't touch that for trading. Now, these are the conditions to become a full-time trader. After becoming a full-time trader, what you should do? You should start with a decent capital size of at least 5 lakh rupees, because uh, if you are having 1 lakh rupee capital, no, then you will be under pressure. Still, you will be under pressure, because you are having a less capital, your profits will be very less, and your losses also will be less. So what happens, that creates a pressure for you. Oh my god, I'm making only 2000 every day, I'm making only 5000 every day, then how I will make money for the entire month, and how I will run my family? So again, a small capital creates you a financial pressure. So you should start with a decent capital of at least 5 lakh rupees. And out of 5 lakhs, what should I expect the return from the market? What I will tell is, have a realistic expectation. Now, as an option buyer, I am capable of making 5 to 10 percentage in a single trade. Every day I am taking around 3 to 4 trades. In a month I am taking around 60 to 80 trades. Now, as an option buyer in a single trade, whereas compare me as an compare option buyer and option seller. An option seller is making anywhere around 1% or 2% in a single trade, but as an option buyer I am able to make more than 5 to 10 percentage in a single trade. But this thought should not be there when you become a full-time trader. Your thought process should be like this: if I'm making 2% on that particular month, then after deducting your losses, after deducting your tax, brokerage, everything, if I am sitting with 2% return on that particular month, then for the next 12 months I'm going to make at least 24%. All right. So the thought process as a full-time trader, when you are starting your full-time trading career, should be, even if I get 2% throughout this month, I am happy with that. You should not think, okay, as an option buyer I can make 5% in a trade, as an option buyer I can make 10% in a trade, if I am taking 20 trades per month, then I'm going to make 200% return. No, you should not have that mindset. That will happen through your experience and progress. That will happen automatically. All you have to do as a new full-time trader is, even if I am making 2% in this month, I am happy. So whatever return comes at the end of the month, that is a different thing. That you don't care about it. You just focus on the progress. I am having a 5 lakh capital. Now, today I have to risk only 2% per 2% per day. And what trade I'm going to take today, whether I'm going to take a trade in Bank Nifty or whether I'm going to take a trade in stocks, focus on your progress, and don't forget to maintain a trading journal. This is a very, very important point I would like to stress. Even if you forget to eat, even if you forget to sleep, don't forget to maintain a trading journal, because for a beginner, for a trader, trading journal is very, very, very important. Without your trading journal, nobody will know where is your weakness and where is your strength. A retail trader will be telling, sir, I'm trading for past 1 year, 2 year, I'm not profitable. Now, what I will ask, give me your trading journal, let me analyze it. He will tell, no, I am not maintaining a trading journal. Then how can I analyze his weakness? He might be jumping from one strategy to another. He might be taking a revenge trades. So whatever you are doing, you should enter it in a trading journal. Only with the help of your trading journal, a person can easily find out your weakness and your strength. So these are the necessary criterias should be fulfilled when you step into a full-time trading.
Right. So wonderfully explained the concept. I think everyone should follow this. I think once what you have to answer yours means you have to question yourself. Should I? Why should I have become a professional trader or a full-time trader? Once one person came to me and he asked me like, I want to become a full-time trader. Give me some inputs. I asked him why you want to become a full-time trader. He said like, I have a less salary. See, this should not be the reason for becoming a full-time trader. I think I told him like first build the capital, get the capital, and build your skills. Then you become a full-time trader, right? Not because just for you have a less salary. Because in there at least you know that end of the month you will get some salary. But here you cannot say like uh, may not there may be you have to pay something to the market
Correct,
end of the
Peter.
month.
See, actually, I want to tell a point here. No, most of the people, most of the new traders, they are stepping into trading only for making money. They are not having interest in stock market. They don't know anything about stock market. They don't know how risky is stock market. They don't know anything. What they are, why they are stepping into stock market is, okay, I can make money easily in market. So this is what they are thinking, and they are getting into trading. Since Shah Rukh Khan and Salman Khan is making crores of money in acting, if I am getting into cine field, what will happen to me? I don't know anything about acting. I don't know anything about acting. So if I am jumping into cinema field, what will happen? No, I will not shine, and I cannot survive. So this should be understood by every new trader. As Peter told, why are you interested in becoming a full-time trader? Why are you interested in trading? First, are you having the interest? Do you know what is happening in market? Do you know the risk involved? There are several families, they have gone bankrupt because of trading. So many miserable stories are there in trading. So they should understand the risk first, and then they should decide whether trading is suitable for their financial conditions, whether trading is suitable for their family condition. First they should prepare for that, and then they should take up trading as their career.
Right. It's not so such a joyful job. Also, I would say like it's a very painful and stressful. Like as a full time trading. If you are like very pro trader, then it maybe you may enjoy a lot and you can make a lot of money. But it's not so easy, right? Shankar?
Yeah, right, you're right,
It's
absolutely
one of
right.
the toughest job, I think. And option buying is, I usually say like it's the toughest job, option buying and option selling. At least you have a theta decay, one edge for you.
Actually, one advantage as an option seller is you can take position every day. As soon as the market opens, you don't have
Yes,
any view, you can take position
take
randomly.
position.
You can take a straddle, or you can take a strangle, or you can sell directional selling. But as an option buyer, just think and see, we cannot take position every day in the morning. We have to wait for the trade, and we have to enter on that particular, and we have to time our entries as well. There are many days breakout happens in a very big candle, in a single candle, and we don't get the opportunity to enter. so
Right.
so we need a breakout, we need a proper size candle, only then we can enter. So there is a lot of difficulty as an option buyer. So only if you are having the patience, your personal life itself will reflects whether option buying is suitable for you or not. If you are more emotional person, if you are short tempered, then option buying is definitely not for you. As an option buyer, you need a lot of patience. Yes, both option buyers and sellers needs a patience. If you're a person who is not having a patience to wait for a proper trade, then option buying is definitely not for you.
True.
So, Gomti, so we had some, like, since we are coming to the end of our session, we have some audience questions like lined up. So, I'll pick up some common questions that have been asked by some of our audience. So, like, one is related to selecting the stocks while trading in stock options. So, it is like, how do you select stocks for your watch list, and based on what CPR condition would you add stocks to watch list? And similar question is like, how do you identify stocks for intraday trading, and do you consider momentum of the stocks to take entry? So, like identifying stocks for your buying options.
Okay, stock selection. When it comes to stock selection, people never believe that I never use scanners for stock selection, but still people never believe me. So basically, what I do for option stock selection is, I generally select the stocks randomly. I go through each and every stocks in derivative segment, and I used to check in weekly chart. Now, since I am having some good experience in technical analysis, as soon as I look at the weekly chart, I easily select whether this is eligible for select going for further analysis. Whether this stock, let's say I'm opening a random stock, and I will start with weekly. If the weekly is not looking good, immediately it is rejected. I never go for daily, I never go for hourly. In that way, what happens, most of the stocks gets rejected, and only few stocks qualify my criteria. The setup should be beautiful in weekly chart, and only if the setup is beautiful in weekly chart, then I go for daily, and then I go for hourly. If weekly, daily and hourly chart is having a beautiful setup, then definitely there will be a narrow CPR in daily, or there will be a narrow CPR in weekly, or there will be a narrow CPR in monthly. Even if there is no narrow CPR at all, then what happens, the prices will jump from monthly CPR. Like bank nifty jumped from monthly CPR this month. After jumping from monthly CPR, bank nifty had a beautiful rally this month of July. So even though if there is a narrow, even though if there is no narrow CPR, still still that particular stock will be trending, because it will be bouncing from monthly or weekly or daily CPR. So this is how I select stocks. I select stocks manually, and I quickly go through the CPR levels, and this is how I add stocks to my watch list. And for checking the momentum of that particular stock, many traders, they ask me whether I use VWAP, whether I use volume for checking the momentum. No, I never use VWAP, or I never use volume to check the momentum. I use only CPR indicator. I use only this normal candlestick pattern breakouts, Bahubali candle, a big bull candle. So this is how I basically focus on the momentum of that particular instrument.
Okay. So, next question was related to like taking, like getting the confirmation from candle close. So the question is like, to enter the trade example after 5 minutes candle closes above R1. So do we need to wait for follow-up candles for confirmation? And one more similar question is like, everyone is telling to wait for candle closing, but I have seen Gomti says screenshot, he never waits for candle closure. If resistance support is broken and places market order, so like, should we wait for candle closure and retest? So these are like similar questions. You could take it.
Basically, most of my trades, what I do, I enter at the last 10 seconds of that particular candle, or I enter at the first 10 seconds of the new candle. So basically, we have to enter only after the breakout candle closes. You no need to wait for a follow up candle at all. As soon as the breakout candle closes, you have to enter at the last 10 seconds, or you have to enter at the first 10 seconds of the new candle. Occasionally, what I do, I enter early also, because I have some conviction like this stock will be going up, this price will be definitely going up. So that is purely experience stuff, no other hidden strategies involved. Purely in experience, whether I should take a early entry or whether I should wait and take a late entry. So that's purely experience. Any other questions, Manas?
I think we are running out of time. There are many more questions, but I think we will have one more session maybe in the future days, and we can have some more questions from the audience, and also we can answer those questions in the offline also. Uh, the some learnings for the day from Mr. Gomati Shankar is like I want to summarize. Don't lose 1 or 2% of the capital. Be disciplined. Trade whenever there is a good opportunity, or if there is a good trade. If you get, then only trade. No trade also a good trade. Don't do the revenge trading. If you have lost 5 or 10% in your capital in the month, then just stop your trading and take a break and go for trade next month with a fresh mind. And don't lose your like more than, yeah, that I have already covered 1 or 2%. And you should know that if you're an option buyer, 30% of the time only market is trending, so only 30% of the time only you can buy the stock. But you can identify different stocks, which are stocks are in the up move or down trend. Those stocks you can choose and you can trade. And 70% of the time market is sideways. So you should be very careful when you are entering with the any trade. And the very important point is you have to maintain your trading journal. So daily maintain your trading journal. Don't expect very big return on investment. These are the learning for the day. I think, Manas, do you want to add any other points here?
No, I think it's more or less covered. And like for buying option, one point mentioned, like we don't get the opportunity every day, and like very we should be very disciplined with our entry trades and buying trades especially, and how to manage the capital. So those were, yeah, good learnings
Yes.
for us.
Yeah. Gomati Shankar, it was a wonderful session. Do you have any final advice to our audience?
Yeah, I will give one advice which is very important to your audience. That is, uh, everybody should develop the art of staying away from the market when your setup is absent. Whenever your setup is absent, you also should be absent from the market. If you develop that particular character, if you develop that particular habit, then definitely you will be profitable as an option buyer or seller. So please develop the art of staying away from the market when your setup is absent.
Wow, super. Thank you very much, Mr. Gomati Shankar, for joining us for today's Twitter Spaces. I hope everyone enjoyed this session. Thank you very much. Thank you, everyone. Thank you, Manas. Thank you, Gomati Shankar,
Thank you,
for
Peter,
joining
and
us.
thank you, Manas. Thank you for having me.
Thanks, Gomti, for joining us. Thank you.